For more than a decade, investing in precious metals, and particularly gold, has been a winning strategy, but it's about to come to an end, according to my guest today, Yoni Jacobs. He is the chief investment strategist at Chart Profit and the author of a new book, Gold Bubble, Profiting from Gold's Impending Collapse. Yoni, those are very strong words. So, there's a bubble in gold and it's about to collapse. Why is it going to collapse?
Oh, well, there's plenty of reasons why gold is in a bubble. Lots of signs are pointing to it, such as over-speculation, parabolic price increases. We've seen it go from $250 an ounce to close to $2,000. Now it's dropped to $1,650. We're seeing mass publicity. We're seeing CNBC constantly talk about it. We're seeing it on the front page of Wall Street Journal. And we're seeing We Buy Gold stores everywhere. That shows.
It's definitely come into the national consciousness in a huge way the last 5 years. Late night TV, you watch any late night TV show, you're going to see a commercial. We'll buy your gold, and I would think that is something that happens when you get close to a peak. But what is going to pop the bubble? Because the bulls will tell you, look, the Fed's printing money like crazy, the ECB is printing money like crazy. You have demand from China, demand from India, and gold as an asset class is still really, really small relative to stocks and bonds. So from that perspective, it still looks attractive. Why do you think those folks are wrong?
So I completely agree with the fundamental reasons, especially when it started out in 2000. They made a lot of good points. It's tangible. Dollar printing is not good. It's not good for assets. It's good for assets. It makes prices go up, but it's not good for the economy. So there's a lot of good fundamental reasons. But aside from the signs of the gold bubble, there's a lot of signs that are showing us that it's about to peak or that it's about to reverse. That's Chinese markets, especially emerging markets, slowing down. We're seeing the dollar coming back, dollar strength.
Yes, it is, especially as the Eurozone is having its problems. People are looking at the dollar as a flight of safety, which is what the role gold was supposed to be playing.
Supposed to be, and you're seeing emerging market weakness, you're seeing dollar strength, you're seeing trouble in Europe, and you're seeing Middle East crises, and still gold is not performing well in all those scenarios. So
you think the fact that gold is below, much less not above its recent peak, is telling you that the froth is starting to come off of it a bit here?
The froth is coming off. We had huge downside volume in September last year from over 1,900, dropped to 1,600. So we have a lot of selling pressure, and at the same time, with all those problems, gold is not performing well. You're seeing commodities slowing down as well. You saw copper fall from a peak because the global economy is slowing. You're seeing oil drop from about 115, 120 down to 75. Even though it's bounced back, it still hasn't retaken the previous highs. So we're seeing in sugar, cotton, all those commodities are slowing down. And gold is even though most people consider it a currency, or a lot of people consider it a currency.
Right. Is it a currency or is it a commodity?
I consider it an asset. It's a commodity.
Okay.
And if we have recession or slowing emerging growth or slowing global growth, then all assets fall. It's a deflationary period. So even though most people are expecting inflation, or a lot of people are expecting inflation, if we enter a recession, that means the price of assets fall. And since gold is an asset and still a commodity, it will fall together with the rest of the commodities.
Okay, so how, as the subtitle of your book says, how do I profit from this impending collapse? Well, before we get there, how big of a collapse are we talking about? How far down do you think gold's going to go?
So if we look at the long-term average, from 250 to 2,000 almost, the long-term average is really 500 to 700. And usually when you have a bubble, just as there was a lot of excitement and enthusiasm on the way up, there's a lot of panic and selling on the way down. And even it breaks above the long-term average and flies above it, but on the way down it actually overshoots to the downside.
So you think below $500?
So I think that right now $1,000 is an important support level in terms of psychological numbers, but we're going down to probably around 700.
And what kind of time frame are you thinking about?
Well, if the last one was 19 years, I can't say that it's going to be rapid. But we will have some sharp downturns as it goes down.
Okay, and how do I profit from this impending collapse?
Sure.
Assuming you're right, of course.
Yeah. Well, there's a couple of ways to do it. You can short gold straight up by GLD. It's an ETF. You can do so. You can short the gold miners, GDX. That's my favorite play. But I'm doing things through put options. So instead of putting so much risk on the table, risking so much money if you're wrong with the short, even though I think you're right, if you do put options, you're leveraging that return.
So you buy out of the money puts, gold at $1,200 an ounce or whatever the near-term contract is.
So the gold miners I started shorting them at 65. So right now they're at about 46 already. So
this is the GDX you're talking about?
GDX,
right.
Exactly. And that I think the gold miner is a much better short because usually the commodity producers take a bigger hit when there's a downturn.